Hello, I'm here with GBPensions Director Tony Chamberlain in their offices on William Pickering Drive in Albany, which is just north of Auckland. One of the things I've heard you talk about quite often is the importance of specialist tax advice. Can you tell me a bit more about why you regard that as an essential part of any potential pension transfer?
Well, one of the main reasons for transferring is because of the tax consequences if you don't, and so therefore it's an inherent part of the transfer process really. So the first 4 years when the individual is tax resident, they are exempt from New Zealand tax if they bring their monies into New Zealand, but after then they're not. And so determining when that 4-year period starts and how much therefore the tax might be if the individual has passed that 4-year exemption period is quite critical.
So let's say I'm someone who's got a trusted accountant who looks after my business and personal finances. Is this something I can go and chat to my accountant about?
Well, some accountants may well feel that they can offer that type of advice, but generally they can't. It's really something that an international tax specialist would need to do because it's a tax issue rather than an accounting issue. And because we have to, or they have to consider the differences between residency and tax residency, and then there's also jurisdictional issues as well, it gets a bit more complicated than just accountancy work. So we work with a number of trusted individuals who have got knowledge of the UK and the New Zealand tax regimes, and in cases both of them have actually worked, I think, for the UK revenue themselves. So these guys really know the regimes of both countries back to front.
You've mentioned the regimes of both countries. Now, on the face of it, you know, the United Kingdom and New Zealand, you think perhaps they were quite similar. It sounds as though that's not actually the case.
Well, although there is a double tax agreement between the two countries, the actual tax regime for pension schemes in both is completely round the other way. So where the UK provides tax incentives, New Zealand doesn't, and where New Zealand provides tax incentives, the UK doesn't. So the regimes of the two countries are completely opposed, which causes lots of confusion, and really that's where the tax issues come from, and that's when people find they have a liability that they had no idea they were ever going to have in the first place.
You're very upfront about the fact that there are numerous factors to consider with any potential pension transfer. So for anyone who's watching this video right now, what's the final piece of advice you'd like to offer them? Well,
you've got to consider all the options, and the transfer to a QROPS, which is promoted heavily on the internet and through New Zealand advisory groups, is not the only option. So that is really what you've got to do. You've got to take impartial advice to obtain information on the 3 main options, and generally deal with recognised bodies or government departments to get your information from. But that's something that we can help you with.
And I was going to ask that, so if somebody does want this advice and is wanting to seek your help, what obligations are they under once they contact you?
Absolutely none at all. We're happy to explain what the implications are of transferring or not. We'll also explain the different options that are available. And we even go away and get the information from the UK companies on their behalf without charge. So the client can say, well, thank you very much for all this information that you've obtained on our behalf, but we don't want to do it. So we're happy with that. There's no charge for that. So it's just about providing education to the individuals and the clients to make that informed decision.
Great. Tony, thanks so much for your time today. Appreciate it.
Thank you.